On that note, I want to bring in 34 years, as a matter of fact. So people are saying, hey, could this be November 1999 or could it be March of 2000? Because many wonder what could take this index and the overall market higher. Here to answer those questions, Seventh Capital, Monica's Meta, and Kingsview Wealth Management CIO, Fox Business contributor Scott Martin. All right, let me just lay it out for the folks out there so we all know what we're talking about here. The milestones for the NASDAQ. It took 3 years to go from 1,000 to 2,000. It only took 1 year to go from 2,000 to 3,000. 1 month to go from 3,000 to 4,000. Just 4 months ago from 4,000 to 5,000. And then guess what, folks? We went into purgatory. We didn't hit a new high for over 7 years. In fact, it was nothing but pure carnage. Monica, what do you think we are right now with respect to history?
Well, I think if we're going to party like 1999, I think we have a little bit more room to run. But you got to remember, we're a very different landscape than 10 years ago. Tech companies in America are the biggest companies in America. So it's not just talking to the strength of the sector, it's talking to the strength of the overall American economy. So the NASDAQ is very representative of some of the biggest companies in America.
It really is, Scott. And you know what's intriguing is it feels like maybe the hype from 2000 when NASDAQ peaked at 5,000 is the reality of 2019.
Yeah, and I like the way Monica kind of let in there. You know, the tech of yesteryear, let's say in the 90s, didn't feel like real tech. You know, it was a lot of hype. There wasn't real balance sheets there. I mean, nowadays, Charles, I mean, look around. I mean, you look at CRM, Salesforce, you look at NVIDIA, you look at Workday. Some of these companies are really tried and true parts of the U.S. economy, aside from, you know, the Amazons and the Googles and the Microsofts. So there's a lot of support there. There's a lot of support with respect to what really these companies are doing these days versus what some of the companies were doing 10, 20 years ago. So to me, that means there's a lot more staying power in today's moves and a lot more things to be excited about as an investor in the NASDAQ Composite Index.
Now, I want to point out with the S&P 500, 450 stocks are up, only 55 are down. The same thing with NASDAQ, Monica. A whole bunch of these names are up, and it's just not those household names. It's just not about Apple anymore. It's not just about Amazon. I mean, one of the big winners this year, Lululemon, Charter Communications, Applied Advanced Micro, Lam Research. You know, these kind of names, they're not necessarily household names. They've been around for a while. People like you, I'm sure, know these names, but the average investor may not. And I think, personally, it's good that the breadth of leadership has expanded.
Well, I think in general, consumers are looking for yield, so they're going beyond just the regular names that you hear all of the time. It's been a very strong year for stocks. I think next year you're going to continue to see a little bit of room to run, but I mean, there's a lot of opportunities here in America, and America continues to be the best game in the world. When you look at where can you invest, this is still the most solid investment opportunity for most consumers.
Scott, what areas do you think could either continue the leadership or will new leadership emerge?
Well, you know, next year's going to be an interesting one, Charles, because all the political environment that's happening and sure to develop going forward, you know, that tends to push and pull other names in other areas. I mean, one area that we've been adding to here has been healthcare. You know, both on, say, the biopharma areas, but also on the healthcare provider and healthcare services areas, because I think a lot of that, let's just say, indiscretion with respect to selling and some of the things that have come out of the candidates' mouths, the hopeful candidates' mouths, has been pushing some of that index and certainly some of that industry around. So for us, as things maybe become clear in 2020, healthcare is an area that we'd be looking at adding, especially on some pullbacks.
You know, it's so funny with healthcare because those stocks have taken off like a rocket, and it's not a coincidence they took off as Elizabeth Warren's poll numbers started to come down. Let me ask you about Boeing, for instance. Boeing took it on the chin Tuesday, yesterday, coming back a little bit today. I think Dave Calhoun is going to do the job. I think he was brought in there. He's got the pedigree and the resume of going in and fixing broken companies. But it could be painful initially as he has to make some admissions that maybe prior management did not do.
Boeing's in a very sticky spot, and frankly, even the U.S. is in a sticky spot because of Boeing. Boeing alone could shave almost 0.5% off of Q1 GDP. So figuring that out is not only important for that company, it's important for our economy. And now that we have trade deals kind of sorted out and some of the uncertainty that was a negative halo over 2019, getting things straight at Boeing is very important for the U.S. in general.
And it's the
trade.
most important stock on the Dow, which in many ways makes it one of the most important stocks in the entire market. Monica, Scott, stay there one moment because I do want to switch gears.